If you've ever hired a bookkeeper or you're thinking about hiring one, you've probably asked yourself, what am I actually paying for? What does a bookkeeper do every single month? That's exactly what I'm covering in this video. I'm going to walk you through 8 things a bookkeeper does for you, and I'm sure there are more if we really get granular, using one of my actual clients as the example. And I picked this client on purpose because their books get audited every single year. So everything I'm about to show you isn't just good enough. It's work that's held up under an outside auditor's magnifying glass. By the end of this video, you'll know exactly what a bookkeeper should be doing for you and how to tell the difference between someone just categorizing transactions and someone actually protecting your business. Quick note, if you want to skip ahead to a specific part, timestamps are available in the description below. So let me back up and tell you how I ended up with this client because it explains a lot about how I approach my work. When I was studying to become a bookkeeper, I was told to stay away from certain industries like restaurants, law firms, e-commerce, and nonprofits. And honestly, that's good advice. Those industries all have specialized bookkeeping needs that are different from your typical service-based business. Well, a nonprofit right near my house needed an in-person bookkeeper, and this nonprofit provides low-cost housing to senior citizens, and they have over 50 residents, and they're funded by the U.S. Department of Housing and Urban Development, or HUD, meaning the federal government. And because they're government funded, my friend, they are audited every single year. I said yes anyway. It was 7 minutes from my house. I only had to be there twice a month, right before payroll. But I'm not going to sugarcoat it. It was baptism by fire. I tell you, baptism by fire. I was brand new. They were my very first client. And I knew from day one that everything I touched would eventually be reviewed by an auditor. Every transaction had to be GAAP compliant, meaning it followed standard accounting rules, not just whatever made sense to me at the time. It had to be HUD compliant. Every single cent had to be accounted for. As a newbie, that was nerve-wracking. But here's the thing. That pressure actually shaped how I do bookkeeping for every client I have, not just this one. If we haven't met yet, I'm Catherine Silverio, owner of Silver Bullet Bookkeeping. I'm a QuickBooks Pro advisor. If you're a business owner and you need help keeping your books accurate and organized, I'd be happy to help. Email me for a free 30-minute discovery call, and I'll leave that info in the description below. And hey, if this is helpful so far, hit that like button and subscribe if you haven't already. It really does help this channel reach more business owners just like you. So let's get into what that actually looks like month to month. The first thing I do for every single client, every single week, is categorize the bank and credit card transactions. Think of it like sorting mail the moment it comes in, instead of letting it pile up on the kitchen counter for 6 months. Every transaction that hits the bank feed in QuickBooks Online needs to land in the right bucket. Is this utility? Is this meals? Is this a supply purchase? Because at tax time, the IRS wants those totals, and the rest of the year, you want those totals too, so you actually know where your money is going. The second thing, and this one trips people up, is splitting loan payments between principal and interest. Here's why this matters. When you make a loan payment, only the interest portion is a deductible expense. The principal portion is paying down what you owe. It reduces a liability on your balance sheet. It's not an expense. If you record the whole payment as one expense, your profit and loss, or P&L, is wrong and your loan balance is wrong. So every month, I split that payment out correctly. I reconcile the loan itself once a year just to make sure the balance still matches what the lender shows. The third thing is reconciling your bank and credit card accounts every month. Reconciling just means comparing what the bank says you have, that's your bank statement, to what QuickBooks says you have, transaction by transaction, until they match exactly. Think of it like your car's dashboard. If your fuel gauge is broken, you don't actually know how much gas you have. You're just guessing. Reconciling is how I make sure your dashboard is telling the truth every single month. So how do you actually do this? Here's what I do. I go to the gear icon, click Reconcile. Choose the bank or credit card account. Then I pull up the bank statement and check the ending date. It isn't always the last day of the month, so don't assume it is. I enter the ending balance from the statement right here. And QuickBooks does the matching from there. The goal is to get to a $0 difference. If it isn't zero, that's not a crisis. It just means something's missing. Maybe a check you wrote cleared the bank the following month. Maybe there's a deposit or an expense that never made it into QuickBooks. Either way, the difference is telling you exactly where to look. My friend, if you've never done this before, this is the one habit I want you to start doing monthly. It's the only way you'll know your income and expenses aren't getting duplicated. The fourth thing is reports. Every client gets a balance sheet and a profit and loss at minimum. For some clients, I also send an accounts receivable aging summary report, which shows who owes you money and how overdue it is, or a budget versus actuals report, which compares what you planned to spend against what you actually spent. Let me show you how I like to present these reports to my clients. I go to Reports, choose Standard Reports, and then click on Balance Sheet. You'll usually find the balance sheet and profit and loss right at the top. For the report period, I choose Last Month, and then select the appropriate accounting method. Now, here's something I really like to do. I compare the report to the previous period, and I also add the dollar change. I use the same format for both the balance sheet and the profit and loss. This makes it much easier to quickly spot large fluctuations, unusual activity, or trends that might need a closer look or an explanation. I also like to customize the number format. I show negative numbers in red so they immediately stand out. Then I save the customization so the next time I'm preparing reports for that client, I can go straight to Custom Reports and pull up the same settings without having to set everything up again. It's a simple process, but it keeps my reporting consistent and saves me time every month. Running a bookkeeping business means long hours at the computer, Zoom meetings, and plenty of deadlines. One thing that's become part of my daily routine is Partner Co. I personally use their slenderized drops as part of my wellness routine. For me, they've become a simple, natural part of my day, and I like that they help me feel more energized, mentally clear, and support my overall wellness. I've also noticed I don't find myself mindlessly snacking as much. If you're curious about the products I use every day, you'll find the links in the description below. And if you'd like to save 30%, be sure to check out the wholesale membership link as well. Now, everything I just covered, categorizing, splitting loans, reconciling, submitting reports, that's the core of what I do for every single client. But some of what I do is extra. It's specific to what a particular client needs. And for this nonprofit, because they're in person and because they're audited, I do quite a bit more. The fifth thing is Accounts Payable Assistance. The property manager of this nonprofit, Jen, had a system already in place before I ever showed up. And my friend, it's a good one. Feel free to steal it for your own business. They operate on a strict budget they have to follow for HUD, and not every vendor gets coded to the same account every time. An Amazon purchase might get expensed to social events one month and office supplies the next. So Jen keeps a folder for me. When I come in, that folder has all the receipts, vendor bills, payroll hours, and deposit slips. And on each piece of paper, there are two things written on it. First, a 4-digit number. Every account in their chart of accounts has a 4-digit number. 1000s are for assets. 2000s are liabilities. 3000s are equity. 4000s are income. 5000s are cost of goods sold. And 6000s are expenses. And that code tells me exactly where it goes. Second, her initials. Her initials tell me two things. I'm authorized to create that bill and print the check. And she's confirmed there's enough money in the checking account to actually pay it. Here's a detail that matters a lot if you're on accrual basis, meaning you record income and expenses when they happen, not just when the cash actually moves. Let's go back to QuickBooks. I click plus create, then bill. and enter the necessary information. But here's what I really want you to catch. I enter the date from the vendor's invoice, not today's date. And I enter the vendor's invoice number. Don't skip these two things, my friend. Then, while I'm still at the office, once all the bills are entered, I click plus create again. Choose pay bills. Enter the starting check number and print the checks. I've got a literal box of blank checks sitting next to my desk. One important thing, my friend, I do not sign those checks, and I don't want you signing those checks either if you're the one entering the bills. That's called separation of duties. It's a checks and balances system, and it's one of the simplest ways to protect a business from mistakes or fraud. The sixth thing is accounts receivable assistance. This isn't something every client needs, but when a client does need it, here's how I handle it. I record the invoice, and when payment comes in, I receive it into undeposited funds first, rather than sending it straight to the bank account in QuickBooks. Undeposited funds is just a holding spot. I like using it because it lets me account for merchant fees or credit card processing fees before the deposit actually lands in the bank. And here's a habit I want you to take away from this video. Every single time I see a deposit come through the bank feed, I pause and think. I check, is there an open invoice this matches? Could this be a transfer between accounts? Could this be an owner putting their own money into the business? I take a moment to actually think about what that deposit is. If it's tied to an invoice, I make sure I match it to that invoice so the income doesn't get counted twice. Because my friend, you really don't want to pay taxes on money you didn't actually earn. The seventh thing is payroll. And I'll be upfront. I only do payroll assistance for this particular client. Theirs happens to be pretty simple. They're on QuickBooks Payroll, and I'm QuickBooks Payroll certified. Once employee details are set up, most of it runs automatically, and QuickBooks Payroll even pays the nonprofit's payroll taxes on their behalf. I want to be clear about something though. I do not file taxes for any of my clients. Paying payroll taxes through the software is different from tax filing, and that distinction matters. In that same folder from Jen, I'll find employee hours like regular time, sick time, holiday, vacation. I enter all of that into QuickBooks. And before I ever hit run on payroll, I go into Jen's office and tell her exactly how much we need in the bank to cover it. She verbally confirms they have it. Now, I can already see that in QuickBooks myself, but I still want to hear her say it. I don't want my client hit with a non-sufficient funds fee. Not on my watch. And last, I also record their wealth management account. This is separate from their regular bank accounts. It's where I record unrealized gains or losses on their investments, meaning the value went up or down on paper, but they haven't actually sold anything yet. Even though it's not cash in the bank, it still needs to show up accurately on the books. So let's come back to where we started. Remember that audit I mentioned at the beginning, the one that happens every single year without fail? I'm not nervous about it anymore, my friend, and here's why. I know in my heart of hearts that I have never reconciled an account with a forced change, also known as an auto adjustment. So how do you actually know if there's been one? While you're on the Reconcile screen, click History by Account. Look at the Changes and Auto Adjustment columns. If you see any amounts sitting in there, that means QuickBooks plugged in a number just to make the reconciliation balance, instead of you actually finding out where the real difference came from. I don't let that happen. If something's off, I investigate why and I fix it. Look at this Changes column. Do you see zero after zero after zero, month after month? Every single one of those zeros was brought to you by Silver Bullet Bookkeeping. And when audit season comes, here are a few reports the auditor asks for that I can pull straight from QuickBooks. Trial balance, general ledger, bank registers, bank reconciliations, payroll reports, bank statements, receipts on specific dates. Well, Jen keeps all the receipts, not me. And I know Jen has every receipt. Everything is accounted for. That's the whole point of doing it right the first time. Audit season doesn't scare me because there's nothing to find. That's really what a bookkeeper does. Categorizing, reconciling, reporting, and depending on the client, accounts receivable assistance, accounts payable assistance, payroll assistance. all built on top of being so accurate that nothing falls apart under scrutiny. If you're not ready to leave just yet, I've got another video right here that I think you'll really enjoy.